Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil. Crude oil is slightly negative today. API came out last night and showed a gasoline build of more than 1 million barrels. Now, there was a draw on crude oil. It was less of a draw than was expected. Market was looking for 1.7, came out about down 1.2. But the build in gasoline helped to keep that pressure we saw after that rise and fall a couple days ago in the crude oil contract. We also got the delayed EIA because of the Labor Day holiday, and we got a crude draw again and a gasoline build again. Much bigger crude draw, over 4 million barrels this time, but the gasoline build was also much bigger, 1.8 million on the EIA versus 1 million in the API. Now, important to look at, 96.8% refinery utilization or refinery capacity being used. That shows you, along with the gasoline builds, that we might be slowly going into refinery turnaround, which is when refineries shut down to do summer blend gasoline. To change from summer blend to winter blend, going into the slowest seasonal demand for gasoline that we get, which is about the next 3 weeks to a month. So that's helping to keep a little bit of a negative tone to this crude oil as we speak right now. Much lower, got down briefly toward that $68 level and then rallied back up after this data came out. And then we're still looking at Iran, especially going into the weekend. U.S. pressure on countries seem to be working. India seems to be now cutting their imports from Iran of crude oil. India gets about 1/10 of their crude oil from Iran, and they're second to China in terms of who gets the most crude oil from Iran. So at least right now, it seems like that U.S. pressure might be working, taking those barrels off. That'll put a little bit of a floor under the market in crude oil as well. So the seasonal factors fighting with this Iran situation in crude oil. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.